Hello guys, welcome back with me. Don't forget to like, comment, share, and subscribe. Argentina hike interest rate 550 bps after inflation overshoots. Buenos Aires returns Argentina central bank hike the country's benchmark interest rate 550 basis points to 75% on Thursday, a day after inflation overshot forecast to near 80% on an annual basis. The hike followed 950 basis points raise in August of the 28th day LELIQ benchmark rates, as the government tries to bring down spiraling prices that are hurting Argentina's saving and salaries and denting the popularity of the Peronist government. A positive real interest rates is also one of the points are agreed between Argentina and the International Monetary Fund or IMF in a new 55 billion loan deal that the country needs to meet its upcoming debt repayment obligation. Reuters reported at the start of September, citing a source with knowledge of the discussion, that the Argentina Central Bank was planning to hike rate to 75% this month due to high level of inflation. United States stocks slip while leads less Fed in focus. New York readers' Wall Street indexes were firmly and in the red after the choppy start to Thursday session, while bond yields rose as investors digested economic data that provided that the Federal Reserve little reason to ease its aggressive interest rate hiking cycle. Oil futures tumbled more than 3% and on-demand concerns, and after a tentative agreement that would avert a United States rail strike, as well as continue United States dollar stretch with expectation for large United States rates increase. Full story. Economic data show United States retail sales unexpectedly rebounded in August as Americans wrapped up purchases of motor vehicles and dined out more while taking advantage of lower gasoline prices, but data for July was revised downward to show retail sales declining instead of flat as previously reported. Separately, the Labor Department said initial claims for state employment benefits fell for the week and September 10 to the lowest level since the end of May. Full story. Investors are widely expecting an aggressive rate hikes after the Federal Open Market Committee or FOMC meeting next week, but nevertheless awaiting hints from Fed Chair Jerome Powell about future policy moves, said Quincy Crosby, chief global strategist at LPL Financial Nasdaq LPLA. The market remains choppy knowing that there's a Fed meeting next week, even though participants agree that it will be 75 basis points rate hike. It's what the statement adds to previous commentary and what Chairman Powell says in his press conference that have them worried. Crosby said the Dow Jones Industrial Average DJI fell 0.56%, the S&P 500 SPX lost 44.69 points or 1.13%, and the Nasdaq Composite IXIC dropped points or 1.43%. MSCI's gauge of stocks across the globe shed 0.96%, while emerging market stocks MSCIEF lost 0.57%. Stocks bonds are currencies on Thursday were showing a market increasingly understanding the Fed is going to hike more aggressively next week, said Coates Lander, chief investment officer at Horizon Investment in Charlotte, North Carolina. Referring particularly to the still strong labor market, Lander said, economic numbers today are throwing a bow on the situation. Treasury yields rose with the 2-year hitting fresh 15 years height after data on retail sales and jobs claims show a resilient economy that gives the Fed ample room to aggressively raise interest rates. Also, already signaling a recession warning at the inverted yield curve, the gap between 2-year and 10-year Treasury yields US 2 US 10 RR widened further to negative 41.4 basis points compared with negative 13.0 bps a week ago United States. I think that's all from me. Don't forget to like, comment, share, and subscribe.